Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings. Today we're diving into some deals that might make you say, that's my T-Mobile, but are they a good deal or are we just getting a dropped call? Stick around to find out. We're looking at an 8K filing from T-Mobile US Inc. It's like a corporate check-in. In this report, T-Mobile announced some preliminary results from their offers to exchange some notes, basically debt, from United States Cellular Corporation, also known as USCC. Before we dive deeper, if you want more content like this, be sure to hit the like button, subscribe, and join our Discord server. It's linked in the description below. Let's get started. First up, the date of this report is June 16, 2025. This is important because it tells us when these events officially happened or were reported. This filing is officially from T-Mobile US Inc. They are located in Bellevue, Washington. This part includes legal disclaimers basically saying this filing isn't meant to cover anything else under different rules. It also clarifies that this report isn't simultaneously satisfying other filing requirements. T-Mobile has several securities or investments registered. Their common stock, with the ticker symbol TMUS, is listed on the Nasdaq Stock Market LLC. They also have numerous senior notes with various due dates also traded on Nasdaq. These are basically different types of debt that T-Mobile has issued and are available for trading. Now to the meat of the report. This section discusses other important events. Specifically, T-Mobile, along with its subsidiary T-Mobile USA, announced some preliminary results. T-Mobile is trying to exchange or swap out some debts. This involves them offering new notes or bonds to holders of old notes from USCC, United States Cellular Corporation. This is related to a prior purchase agreement they signed in May 2024 with USCC and others. This all stems from a securities purchase agreement from a year ago. T-Mobile says they put out a press release with the initial numbers for these exchange offers. If you are not happy with being paid later, don't worry, it's all about to be more clear. T-Mobile were offering various new notes to exchange for old notes from USCC. For example, they offered 6.700% senior notes due 2033, 6.25 70% senior notes due 2006-9, and so on for similar notes that USCC had. The press release about this exchange is attached as Exhibit 99.1 to this report, so you can read their official words about it. T-Mobile wants to make it super clear that this report isn't an official offer. It is just an announcement of what's happening. The actual offer is in another document they filed called the prospectus. This section lists all the exhibits included in the report, like the press release we just mentioned. Exhibit 99.1 is the official title of the press release. T-Mobile US Inc. and T-Mobile USA Inc. announce preliminary results of exchange offers and consent solicitations for certain of United States Cellular Corporation's outstanding debt securities. It's all about announcing initial results of swapping debt. Let's see what this press release says. I am bold to Exhibit 99.1. Okay, it seems I cannot scroll that file, so I will continue to analyze this report without analyzing the press release. Finally, the signatures. This just means an authorized person, Peter Osvaldik, signed off on the report. So what does this mean for T-Mobile? Well, this 8K filing is T-Mobile giving us a heads up about their move to take on some of USCC's debt. Why would they do this? It's all about future control and assets. By exchanging these notes, T-Mobile integrates USCC's debts into its own financial structure. This can streamline operations if T-Mobile plans to integrate USCC's assets or business lines in the future. If T-Mobile effectively manages this exchange, it can have better control over debt obligations and potentially lower its overall borrowing costs. This could lead to more financial flexibility and better earnings in the long run. Managing debt effectively in this way is really important. However, there are still risks. The success of these exchanges depends heavily on how the market perceives the new T-Mobile notes and how many USCC note holders agree to the switch. Poor market conditions or a lack of investor confidence could make the exchange offers less attractive. Additionally, it could potentially increase their debt load. In conclusion, this 8K filing suggests T-Mobile is strategically positioning itself through debt exchanges to align with its broader business strategies. It's a move that could offer significant long-term benefits, but requires careful management and market navigation. Alright, that's our peek into T-Mobile's latest filing. What do you think about these debt moves and their effect on the company's future? Drop your thoughts in the comments below. And if you learned something from this analysis, hitting that like button really helps, and don't forget to subscribe for more deep dives. Also, be sure to check out the Discord link in the description to join our community. Thanks for watching, and see you in the next one.